Let's dive into the markets today, and I've got a special guest. Before we get into that, I do want to thank our sponsor, and that, of course, is iTrust Capital. You guys can get over to iTrust and enjoy setting up your own crypto IRA. You can still get some tax benefits for that in this year for last year's tax year. So make sure and check that out with your tax preparers and your attorneys, all that good stuff. But the key here with iTrust is you've got the complete control over managing it inside your own iTrust crypto IRA. So very easy to set up, and you've got access to almost everything, all kinds of crypto as well as gold and silver. Go over to iTrust and of course use our link down below. It's going to give you a $100 funding reward to get started. It'll be worth your time. Let's go over to our guest today, and but before I do that, I want to hit a clip, and then we'll bring in our guest. This is going to be Stephen from Canary Capital, and we're going to talk about where the markets are going. But let me go into, I know a lot of you have been watching the news over the weekend, so let's run that clip.
Because of spiraling inflation of the bolivar, a lot of people had turned to cryptocurrencies, mining Ethereum and Bitcoin in their homes in order to just have a stable source of cash. But the other side of this is the fact that there are multiple reports that the government itself has been looking to evade sanctions by doing sales of oil in Tether, which they then move into Bitcoin. And so much of this market moves on sentiment. So even the promise that perhaps the U.S. government, when they came in, might seize these assets, hold on to it, that's a bull case for Bitcoin if you have a stockpile such as that that isn't being liquidated.
All right, very interesting stuff. Very quickly, because we got to go. Is it a tailwind for just Bitcoin or also Ethereum, Solana, and some of these other coins?
It's a rising tide lifts all ships. In fact, XRP has had outsized performance.
All right, so a couple of things there that will impact the market. And joining me now is Stephen McClurg, coming in as the CEO from Canary Capital. Been on before. How are you, Stephen?
I'm fantastic. How are you, Paul?
Excellent. Happy New Year. So this is your first appearance on the network this year, so welcome in. What do you think
This
about...
is the first time I left the house in 2 weeks. I've been exhausted after such a year, and I'm just...
You get a little bit of time off. I love it. Well, we're back to work here, man. So we're going to talk, and we're going to drill you with questions. And the first question I have, you look at the things that have happened over the weekend. Obviously, with Venezuela, this starts to put a lot of pressure both on energy markets, you could say precious metals, and then also crypto. The markets seem to respond. I don't know if it was necessarily directly related to Venezuela, but when you look at some of the things that are happening, U.S. oil stocks were up considerable across the board. And then, of course, you had these things, which are everything from gold reserves to oil reserves. All of that is now in play within Venezuela, a country in our hemisphere. What do you think is impactful on crypto in general from what's going on a global perspective of how this plays into the markets?
Well, first of all, to hit a little bit on commodities, oil and other commodities that come out of South America, that has gone up in price. There's speculation that on the ability to produce as much oil as it has out of Venezuela, and Venezuela has the largest oil reserves in the world. So it's no accident that we invaded them. And but getting into cryptocurrencies, that has also led into buying up of gold and cryptocurrencies. And I believe that's primarily due to mistrust of holding currencies from any country. And when one country invades another country for whatever the reason is, it does create a bit of a panic. Sometimes everything just goes down in price, but in this particular instance, it has gone up in price. And I do believe it's due to the anticipation of a weak dollar.
So weaker dollar, obviously this has been kind of our discussion for the last several years, is the debasement trade and looking at what we've seen in digital assets playing out. But you and I have gone back and forth on, is this a bear market? Is it the beginning of another bull run? Is the 4-year cycle over? Your position was fairly strong last year as you felt that we were heading into a deep bear market. With what you're seeing right now, because it appears that we could have had tax loss harvesting taking place in December, and then people just rebuying, or possibly what's happened just in the short few days with the Trump administration. Would you change your position right now for 2026? Would you be bearish or bullish right now?
Well, it depends on the asset. If we're talking about Bitcoin, we'll start there. I am bearish on Bitcoin for this year. I do believe that October 6th was the absolute peak of this particular cycle for Bitcoin. And we're now in the bear leg of the cycle. And, we discussed this before, several reasons why Bitcoin has kind of, been pretty flat this year.
Yeah.
But my expectation is, Bitcoin dropped 30% from October 6th, and I expect another 20 to 30% down from here over the next 6 to 9 months until we hit another trough, and then we're back into the next cycle and back into a bull market. I don't expect to see a new all-time high in Bitcoin in 2026.
All right.
Now, most cryptocurrencies are going to follow Bitcoin, right? But I do believe there's a divergence happening. And the theme of 2026 is going to be building. And it's going to be primarily tokenization of real world assets, including stable coins. And any protocol that is heavily involved in this, and that does include XRP Ledger, or anything that's building real world applications for this technology, which also include Hedera, I believe that those two assets are going to diverge from Bitcoin in this cycle. Now, does that mean that they're going to go up triple, quadruple in 2026? Probably not. I'm expecting low double-digit growth in price in 2026 for the handful of crypto assets that fall outside of Bitcoin and all of its followers. But I do expect to see probably positive returns, if not flat, while Bitcoin's down 30%.
I'm looking at the list of ETFs that you have over on Canary Capital. The XRP one we have right there, which has been just an absolute stellar performer for you guys. Then you've got, of course, the Marinade Solana ETF. HBAR you just mentioned, which just went live, and then, of course, Litecoin. And we'll talk about SUI in a minute. I know you guys are bringing one on for that, and I want to kind of get into that a little bit. You're claiming that right now, the brethren of Bitcoin, which I would say would be most likely ETH, and a lot of the altcoins that nest up underneath Bitcoin, typically when it goes up, those altcoins go with it. We've witnessed that just over the last 3 days. Those are the ones you say are potentially in for lower performance versus these. Is that what I'm hearing?
Absolutely. I agree that ETH will probably follow Bitcoin down. A lot of the Bitcoin-like tokens, which include privacy coins, by the way, they'll either follow Bitcoin down or they'll diverge as privacy. I do think that, Monero, Zcash, Litecoin, all of those all have either full privacy or they have privacy components. So they could diverge. They should diverge. Will they actually? I don't know. I'm waiting to see. But I am really focused on the theme of the year, and that is tokenization, and anything that's building really new, unique tokenization should fall into that category. And that does include Hedera, it includes XRP Ledger, it includes Sol, SUI, Say, Injective. Those are all chains that we really like for that. So we'll see what happens there.
Stephen, you just mentioned a lot of tokens. Are those all going to be ETFs in the Canary roster this year?
Oh, we hope so. I mean, that is really, and again, when we're talking about like what we're focusing on, we're focusing on any blockchain or technology that is focused on tokenization of real world assets.
Okay.
And the ones that are doing it from a new perspective, I'm particularly interested in. A lot of people already do it on ETH, but what's happening with ETH is companies like JP Morgan just simply take the code or soft fork it out and then build their own. So they're not even utilizing ETH, they're just using the code. And I see a lot more of that. That is one of the downfalls of ETH for being around for so long, is you can simply fork it and build your own either public or private network.
What about Ondo? I mean, this is one that has been in the RWA space for a while and has somewhat led it. What's your position on that?
Yeah, I mean, I expect great things out of Ondo. It's not one that we've been particularly focused on recently, but it is one that I've been watching, and I do believe that they're going to be doing a lot in tokenization as well.
All right. I've got a clip here because this gets us into the theme that you're talking about versus the theme that some other analysts are talking about. This is a clip of Tom Lee talking about Bitcoin. Take a look.
You're back on the horse of predicting Bitcoin, even though it didn't work out last year.
It did not.
You know, it's like, no, I would not say that you're a terrible financial advisor based on trying to predict Bitcoin. I don't know who could do that. So I'm not going to hold your feet to the fire. But as I said, you're getting right back on the horse. 250,000?
Yeah, you can bleep me out too if I just say the number. Yeah, in 2026, if Bitcoin gets to 200 or 250,000, it would be breaking the 4-year cycle. So that's sort of part of our view is that this, you know, if you follow the 4-year cycle, Bitcoin should be down this year. But I think that there's tailwinds that are building. And part of it is we kind of reset leverage on October 10th with that big shock.
Right.
And now I think there is still institutional adoption taking place, and Wall Street is still building a lot of products on the blockchain. And then we have U.S. government support. So I think these are tailwinds that help Bitcoin recover this year.
All right, so just to set the table here, just everybody knows we're not picking on Tom. This guy has been right for a lot of times about Bitcoin. He just happened to be wrong last year of it hitting an all-time high, and I think it was up to 200K. Now, he's doubling down like a good analyst always does, including yourself, Stephen. But how are we so far apart between you and Tom Lee? He's going all in. You're telling me Bitcoin is the last thing I should buy.
Well, look, I'm going to say that I was wrong as well for 2025. My prediction was 140,000. We didn't quite get there.
Well, you were much closer. Come on. You have to give yourself a little
hey,
bit.
Wrong is wrong, right? I mean, this isn't hand grenades, but it is, you know, it is somewhat. And I did say that I expected a top to be in October. So,
right.
You know, I think the Binance situation sort of ended the rally a little prematurely on October 10th. Could we have gotten to 140? Maybe, but who knows? Regardless, my prediction was wrong. But what I'm going to say is that there's not a whole lot of liquidity in the markets right now. Mm-hmm. And that goes across the board, whether it's crypto, whether it's equities, even the bond market. There's a lack of liquidity. It's the reason why the Fed said that they were going to end quantitative tightening or unwinding the balance sheet on December 1st, because they lacked liquidity, the banks lacked liquidity, and they needed enough liquidity to be able to service the repo market. So even the banks don't have liquidity, but retail is the primary driver here of a lot of prices in crypto. So without liquidity in retail investors, I just don't see how you're going to do it. And there's not enough institutional money coming in as fast and as swiftly as everybody thinks it is to actually offset that. I mean, it is coming in, but it's a very slow process. And I don't believe that they're 100% focused on Bitcoin anymore. They're focused on, areas where there are real world applications that are being built, particularly, asset tokenization. And that's just where everybody's focus is right now. That's just the reality of it. They're not speculating on Bitcoin anymore. And by the way, the speculators, which is mostly the retail market, where there is liquidity, it's moved to prediction markets. Mm-hmm. It's like, people aren't betting on meme coins anymore when there's a real edge on betting in prediction markets, or at least people have a perceived edge that they can predict things accurately. And even over the weekend, there was a couple of guys that made, ton of money betting on whether or not we would arrest the Venezuelan president, right?
Yeah.
So the prediction markets are insane right now, and that's where retail liquidity has moved.
I'm looking at the overall market right now. Fear and greed is up to neutral. We haven't seen the neutral position in a while, so that in itself pretty intense. And then of course what we're seeing on overall market cap holding at 3.2, looks like a 3.2 trillion. This would counterbalance your position on this, outside of maybe something like XRP. Solana's up, pretty much everything up. XRP being the outlier here at almost 10%. But how would you argue that of the fact that we have seen a consistent growth really since the 18th of December where we were at 2.8 trillion. Now market cap is sitting at 3.2 trillion in crypto. That's a pretty dynamic run. How would you argue that?
Well, first of all, to my point, XRP up almost 10% right now.
Yeah.
It is one of the divergent assets, and I do believe that XRP and others similar to that are going to continue to be divergent. But even this short-term rally, I do believe it's only a short-term rally, and it's not going to persist through 2026.
Okay.
I do agree with you. A statement that you said earlier, where there was a lot of tax loss selling at the end of the year. I mean, I did it myself, right? It's like, okay, you have an opportunity to take some tax losses, let's do it. And a lot of people in the market did do that, which kind of was a drag through the month of December. And now the markets have opened up again. You don't have the tax loss selling pressure anymore. People are still going to speculate. People are still going to buy, but 3% isn't a lot considering how much Bitcoin has come down. I do believe that Bitcoin, ETH, maybe even Solana will continue to drag down throughout 2026 as the month of January goes away.
Okay, well, I mean, this is, it's interesting I'm glad that we always get you on, because you always bring kind of a little bit of reality check to me, even though I'm usually much more bullish in the markets, and I just try to stay always bullish. But one thing I'm watching right now are the digital asset treasuries, and I continue to track what BitMine is doing. They provided, and of course we have their shareholder meeting coming up here pretty soon, and they keep talking about the potential of what I think could be happening, and that is this right here, is that we think there's a merger brewing. And of course, Tom Lee's stock is up 14% now, as we've seen him ask these shareholders to approve this dramatic share increase. Do you think that if Tom Lee were to go out and acquire another one or two ETH digital asset treasury companies, do you feel like that would be positive for Ethereum in general?
Look, I think this is positive for not just Ethereum, but for DATs across the board, for all crypto assets across the board. I do believe that consolidation needs to happen.
Okay.
A lot of these DATs that came out, they had operating companies that were losing money, had massive debt, they were poorly ran, and they looked at the crypto bros as a lifeline to keep their publicly traded businesses, alive and well, so they don't have to face bankruptcy. And they're like, yeah, sure, we'll do anything. You want us to add, random crypto asset to the treasury? We'll do it. Now, granted, I think there's a lot of legitimate ones out there as well, but most of them were, busted public companies that needed a lifeline.
Right.
And the best thing for the market right now is, number one, consolidation. Put some of these together, get rid of bad operating businesses that are legacy, that shouldn't be there anymore, and focus around one good operating business, kind of like MicroStrategy. MicroStrategy has a profitable operating business that pays all the other bills, and that way Bitcoin can do what Bitcoin does. And I think these other DATs are going to need that as well. So I hope that BitMine acquires other ETH DATs, and I hope that there's other consolidation across other assets as well.
So do you think he will? I mean, based on what you're seeing in the market right now, do you think that's a possibility that could happen?
I do. I mean, not that I have no information, whatsoever on this, other than,
though, right?
Yeah, speculation.
Wouldn't it seem like a good business move? Yeah, okay.
It's a smart move. It's a smart move for him, and it's good for the industry.
Yeah.
It's especially good for some of these DATs that are, failing.
Yeah.
But I think that consolidation will really help. Also, the price of Ethereum, the price of other assets. Right now there's too many DATs, and they look like closed-end funds, right? Old closed-end funds, when there's less demand, then they trade at a discount. When there's more demand, they trade at a premium. And the fact that most of these DATs are trading at 50% discounts shows that there's very little demand for them. And if there was some consolidation and some understanding of, okay, this is the Ethereum DAT, this is the Bitcoin DAT, then I do believe that the world will be a better place and crypto prices will be a little bit more stable. Let's
talk about the new Fed chair, likelihood to occur. It's going to be the most consequential events of 2026. I still agree with that to a certain extent. However, the question is do you think Hassett is going to, he's in the lead right now, do you think he will continue to hold that position as possibly an assignment could be announced any time now by the administration? What's your position?
Yeah, he's probably my personal leading candidate of who I think is going to get appointed. Who knows what will happen? I'm not behind the scenes there, so I don't know. But Hassett is, if I were to bet on it, that's who I would bet on. And then the appointment of a new Fed chair is also extremely important for crypto prices too. So a lot of people believe that crypto prices will just instantly start ripping and hit all new time highs when he's appointed or when he's named. I believe it's going to take some time because right now, if you look at rates across the board and you look at the shape of the curve, the curve is flat, but short-term rates are still higher than 6 month, 1 year, 2 year, even 5 year. So the Fed is probably behind at least one 25 basis point cut to create at least a normalized market where we don't have any kind of inversion. And that needs to happen. And then beyond that, it's going to take some time for the Fed to both cut rates. Well, first of all, for him to be nominated and then confirmed, and then for the Fed to actually start cutting rates and for that to take effect into global monetary supply in order to cause prices to go up. So my estimate of when the next trough is going to probably be this summer, end of the summer, and then the bear market begins again, likely in the fall, sometime in Q3, Q4.
What do you make of these, these capital injections into the balance sheet right now that have been slowly coming in from the Fed over the last 2 weeks? Do you see that as any indicator on QE?
Yeah, I mean, really, what that is right now is helping the banks for the most part and helping treasuries. All they're doing is keeping the balance sheet stable. So as credit's rolling off, they're just buying it back and buying it in the areas that they believe need the most help, which right now is the short end of the curve. We're really, a 25 basis point cut could have helped as well. But buying assets on the short end is actually helping, with banks with their repo demand right now. And their repo demand is extremely high.
Yeah. All right. So you're saying slow potential on cuts for the spring. Do you think we will get a cut before May?
I do. I do believe the next Fed meeting will produce one more 25 basis point cut. And again, it's just to save the banks. I think if there's not a 25 basis point cut and if they had not stopped, bleeding off the balance sheet, then we probably would have seen a bank failure at the end of the year or even coming soon. But again, I want to point out that a lot of people think that, well, look, this is all easing and it's going to cause asset prices to rise. This isn't enough to cause asset prices to rise. This is a Band-Aid to basically stop some bleeding at the banks. It's not enough to really do any more positive damage than that.
Mm-hmm. Okay. Listen, you got some good news here that I have to talk about, and that is SUI S. Is that what you're calling it, or is it Swiss?
Well, technically it's SUI. Is how you say it, but yes, that is the tick.
Yes, it's coming soon. We've had SUI team on before, and we've kind of gone back and forth with Evan and Adenye on the pronunciation of it. But the good thing, you could have selected a lot of different assets here. Why go the SUI route?
Well, first of all, we're a really big fan of the Miston Labs team. A lot of them came from Facebook. They had worked on, if you remember, the old Facebook
Libra
tokenization project and stablecoin. And I just, they're a very high caliber team. It is a top 20 token. So these are some of the things that we were looking at when we were selecting our product suite. But I do believe that given their experience and given what they have done and what they are doing right now, that they're going to be one of the leaders in tokenization. So we're betting really big on what Miston Labs is doing and what they're doing.
Well, listen, guys, we are going to be watching the markets very closely. So, Stephen, I'm going to get you back on as we start to tread through this current pump that the markets are in right now. and see if you are right or wrong. A check back probably in the first quarter would be due, I think, with you. So we'll definitely get you back. Thanks for coming in today. I appreciate it.
Absolutely. Thanks for having me, Paul.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.